Okay guys, here's where we are. So look, I'm in a bit of a replay mode at the moment, and that's because I want to show you a little bit about how market makers work, right? So the point of this is that, you know, when we were coming down all the way from, you know, these are obviously the highs, as we're coming down, you know, a lot of people ape into short. The peak of these, you're going to find an awful lot of liquidity, right? Now, the reason it's liquidity is because a lot of stop losses will be there, additional zones where people are going to want to either short or buy. You know, you're going to have a lot of liquidity, and markets, well, the food for the market is liquidity, let's be frank. What tends to happen, even if I was to just draw a simple trend line kind of down here, right? Even if we don't take this one, maybe we go here, right? We've got a loose trend line, okay, that's been, you know, respected for some time. And what tends to happen is each time we come close to this trend line, you'll get a lot of people who will short, thinking, okay, well, this is the point where we're going to short from. Here, a little bit of a fake out, shorting again, and then obviously coming down. But what happens is, because the market makers are patient in the way they approach things, they've got time, they've got the money, they've got the capital to be able to sit and wait. At some point it's going to happen, right, where all of these stops, so think of each one of these lines here as a point of liquidity, right? Point of liquidity meaning money getting taken off the average investor, the me, the you know, the retail guys out there who are not as savvy to markets, but will think they'll see a pattern. And as human beings, we are very patternistic in the sense that we see a pattern and our eyes drawn to a certain area on the chart, and it's like, okay, this is going to be the point. And a lot of these kind of patterns that you see out in the markets are geared towards and designed towards trapping traders, right? Where we see liquidity here, these are traps, right? These are where liquidity is going to be fixed in the chart, pockets of liquidity where we're going to go. And you'd be forgiven actually for each time we approach this area, because look, it's been since August 2022. But if you remember, at the end of the year, everyone was super bearish. Everyone was like, okay, this is, you know, we're going down to 16k. By the way, me included. Yeah, I was super bearish. I didn't really have a positive outlook. Let's say it's a very harsh lesson that we all need to learn, because I'm going to just show you exactly what happened, and each time we effectively got wrecked. So here we are in replay mode now, and we're going to go to current day's time, right? So we breached this, and a lot of people will have been short on here, smash, but of course, boom, wrecked, and we get wrecked on the second one, but we're not over yet. We wrecked the third element. This is at the 22,800 mark, and then again, where we are now in today's markets we are fastly approaching this line, right? So we're going to come close to this 25,224, but here's a conundrum. There's going to be liquidity in this zone, and I'm talking shitload of liquidity in this zone. How do you think the next week is going to play out? Do you think we're going to come and take this liquidity here at this zone? And then if we take that liquidity, what happens next? Do we go all the way up to the 32 mark where the next zone of liquidity is going to lie? Or do we come and start taking and collecting on a lot of these? Because you've got to remember, right, as price goes up, new pockets of liquidity are being created beneath us, because these 50x, 75x, 100x leverage that are being put on either going to be recognized as liquidations, or they're going to be, you know, stop losses in and around these areas and these zones, which are sell side liquidity, right? So right now, all of these are buy side liquidity, or they were buy side liquidity. But that is going to be the same for the downside. So it's like, okay, money and cash and liquidity is food for the markets, right? So this is essentially where they're going to go to the path of least resistance, right? So here's what I think is going to happen. Of course, it's not financial advice, but I can almost guarantee, may not be the right word, but I can almost guarantee that we're going to come and smash through this liquidity. I don't know how far we'll go up. Maybe we'll clear some of these imbalances around this zone. Look at some of my previous videos. I've got tons of confluence around this area why this would be clear zone, notwithstanding the fact that this is a crab harmonic. Again, just go and have a look at some previous videos. So for me, I think we're going to hit through this liquidity here. Realistically, we should start to see some breaks to the downside. So you're going to see, you know, let me just take this liquidity off the zone a second, and we'll draw some new liquidity zones. So right now we're going to have large amount of liquidity there, we're going to have large amounts of liquidity there, and of course each stop on the way down here you're going to have liquidity. It's not just at these points, you're going to have Fibonacci retracements, you're going to have daily key levels, weekly, maybe even monthly levels, but you're going to see there's going to be liquidity all the way down in these zones here and these areas. Now, I'm not suggesting we're going to go right down to these levels. Who knows? It's Bitcoin, right? So you've got to always have a plan. But if you look at that, you look at where the liquidity is there versus where the liquidity is up there. Let's look at that as a point. To come all the way up there, you're talking a 28% move. So to the point 7,114 basis points. versus, you know, a move to the downside, which would be 4,000 points to there, you know, another 1,000 points to there, so on and so forth. So it's like, you know, it's a bigger move to the downside here. I'll grant you that to clear these, but I'm almost expecting the way the markets will work is it's constantly looking for where liquidity is. It really is as simple as that. Just keep your eyes kind of focused and trained on what happens next. But that zone, like I said, that 25,200 is going to be a really key zone. I expect to see a lot of volatility. Keen to see how the bears react to that zone specifically, but my feeling is we'll hit that, clear the liquidity, and then we shall start to move down. So cool. I think that will be it for now, and I shall see you guys in the next one. Peace out.